SDBullion has just launched survival food, headlined by the only 100% organic, GMO-free survival food. Prepare like the doc. Purchase your survival food from SDBullion today.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets wrap. Well, Eric, both gold and silver were down hard on Thursday following the big FOMC taper announcement Wednesday. Bernanke is a last hurrah, announcing a taper before he leaves the Fed, and Janet Yellen is introduced, formally nominated and introduced in January. The Fed announcing a $5 billion per month reduction, both in Treasury purchases and the mortgage-backed securities, beginning next month in January. So a total of $10 billion per month reduction in QE to $75 billion a month. Bernanke also threatening in his press conference that the Fed plans to have incremental small tapers throughout the next upcoming meetings as well. In the aftermath of that, gold and silver really actually were trading up on the aftermath of the Fed announcement in the half an hour prior, or I should say in between the Fed announcement and Bernanke's press conference, before the hammer proverbially dropped once again. And then the real sell-off was yesterday on Thursday, gold breaching support at $1,200, coming within $10 of June lows at $11.78. I think it touched $11.88 yesterday. Silver traded pretty strongly on Thursday, refusing to break down under 1920, even while gold broke through 1,200. And then up days for both the metals here this afternoon on Friday, after trading under 1,200 throughout the majority of the day Thursday, throughout London trading and Asian trading overnight. Just about 10 o'clock, just after 10 o'clock here today on Friday, gold popped back up through 1,200 and was able to stay above the level throughout the afternoon into the close, with the close at 1,202. Silver also made a nice 20 or 30 cent up move on here today, Friday, from the 1920 level. Had broken down a little bit under that overnight hours, and to close right around 1940 today on Friday. So what's your thoughts, Eric, on both of the Fed announcement and then the metals action throughout the second half of the week?
Well, we got the big picture call wrong as far as what Bernanke would do, that's for sure. I'm somewhat surprised, but then, stepping back and looking at, how he might feel about how to set his legacy going forward, it certainly would have strong motivation to say, or to be able to say in the future, I started the tapering, I started to clean up the mess that I helped create. And that also takes away a lot of the pressure on Janet Yellen, to an ironic point, because when she steps into her formal role as the chairperson, she will not have to deal with, well, are you going to start tapering or are you not going to start tapering, because Bernanke already started it. So, looking at that as a backdrop to how we actually saw the market react and also where we go forward, you can kind of take away a couple of interesting points. First, the market trading itself was a little bizarre that day, and we were running, that live chat with a whole bunch of folk. I mean, we had up to 85 people at one point chatting away, and that was right in between or just before the actual press release and through the period to when they did the press conference. And I don't know, somewhere halfway between that period, all of a sudden the market started doing some really bizarre things. First, the 10-year yield was rising, but then all of a sudden began to fall, and prices were moving up, and people were buying the bonds, even though the Federal Reserve is going to reduce its ability to serve as backstop as the buyer of last resort for bonds. Counterintuitive. Next, the stock market, which initially dove down very strongly, as you would expect, because the lifeline of all this liquidity that's been pumping up the stock market would be tapered going forward. So totally rational behavior, but then surprise, surprise, somebody comes in and purchases a whole bunch of S&P 500 futures, and the stock market begins to take off, and scaring the bejesus out of all the people who were short going into this announcement. And then lo and behold, by the end of the day, we have this huge rally in the Dow and S&P 500 that's making everyone scratch their head. And the net result of all of this stuff, and I'll get to gold as well, created a picture, a message that was sent to the mainstream media and then outward that, oh, everybody in the market believes that the Fed has everything under control, the economy is doing well, and quite frankly, this is all stage managed. I mean, it fits in with the way and techniques that the Fed and the Treasury and the Working Group on Finance and all of the other banks that have a vested interest in going along with this scripted play that the Fed and Treasury orchestrate to paint a picture of all that is well. And meanwhile, when we look at gold and silver, silver in particular, in that same period of where first press release and then the press conference, silver actually made the high for the day. It was at its highest point right before the press conference came in, and then later throughout the COMEX close, and then into the aftermarket hours, you saw Fed or gold cartel actions pushing the metal prices down, and in particular around 240, 241, 242 in the morning or so on Thursday morning, there was something like 5,000 contracts dumped in a 2-minute period, which represents around 5 million or so ounces. I mean, it's a lot of gold. Excuse me, I got 500,000 ounces of gold dumped into the market and pushing the prices before the London Open much down, so that during the London trading throughout Thursday, we saw gold and silver at a much lower price level than they were the day before. And then the London PM fix, which is really important for comparison's sake for the average people who read newspaper level analysis of the markets and whatnot, and policymakers and the mainstream media and all the other people that don't look at intraday charts and stuff, that are not following these markets on a tick by tick basis. The message was transmitted, because when you layer over Wednesday's close in the COMEX before the metals went up after the Bernanke press release, and you look at that compared to Thursday's dive down closing prices, you come away with this, gold was down more than $40. And in reality, it was hiding all of the manipulative actions and stage management that these guys did, because it didn't occur during the hours that the newspapers and standard media pay attention to, and that's exactly how they orchestrate these things. So, lo and behold, the change is reported as something just, there never was that spike up in silver and gold during the inter-period, because it went down the Orwellian memory hole. And, there we are, now on Friday with all the damage done. It looks like the regular traders and the cartel, and even when it comes to gold and silver, just kind of stepping back and letting things settle, because their mission has been accomplished. The message of all is well, confidence in the market remains with the wisdom of the central planners, and as we move forward, Janet Yellen is going to have a clean slate with less pressure on her to begin tapering. And you have to hand it to the skill of these guys, because they really do understand public relations. They really do understand MOPE, management of perspective economics. They do a damn good job of leading around everybody by the nose, with the exception of people that spend a huge amount of time, looking under the carpet, spending time looking at the tick-by-tick trading, or individual periods where there's a lot of motion that the mainstream doesn't examine. So anyway, it's frustrating to see this happen, but the big picture fundamentals have not changed. You can only put lipstick on a pig so often before the pig turns around and bites you.
And speaking of the mainstreams trying to paint a different picture and manage it, I wanted to discuss one of the other interesting stories this week. I published it on Silver Doctors on Thursday, and Zero Hedge picked up on the video late Thursday night as well, was an interview on Bloomberg, so one of the big two financial MSM stations, where Bloomberg Industries' Kenneth Hoffman, pretty shockingly, for the first time in my memory, actually revealed on MSM Media that the West is being drained of gold and it's all going to China and Hong Kong. And I want to read a couple of the direct quotes here from Kenneth Hoffman. And he basically goes on to say that London's gold vaults are now virtually empty. So I'll go ahead and read the quote here. You could go into a vault in London a couple of years ago. The vaults were packed to the rafters with gold, and the gold would trade from me to you to somebody else. You can walk into these vaults today, and they are virtually empty. All that gold, 26 million ounces, has been transferred from London and has gone to Switzerland, where it has been recast to higher grade formats and shipped off to Hong Kong and then to China, never to return. Now, Hoffman goes on in the video to use that to try to bash gold. I think he claims gold is heading to $700 or $800 an ounce or something. He basically tries to paint the picture that nobody in the West wants gold anymore. That's why they're getting rid of it. It almost reminds me of the whole MSM narrative with GLD over the first half of this year, where GLD's vaults were just being massively drained day after day after day. And the MSM reported on the story, but rather than ignoring it, but tried to report the story as if it were a bearish story for gold, that everyone is just dumping gold, where in reality it was people redeeming the physical and trying to get a hold of all the physical. So it kind of reminds me of that same thing. The MSM finally, for the first time in my memory, the MSM is reporting that physical gold is being drained from the West and shipped to the East. Now they're trying to manage that story to make it appear somehow bearish for gold, but I think it's rather significant and definitely interesting that the MSM has even acknowledged this. Eric, what are your thoughts?
That's true, and it also serves a double purpose when it comes to the value of their messaging, because the mainstream person in finance who isn't super informed about the issues that are going on with gold manipulation, silver manipulation, what have you, will take that story at face value and say, oh, okay, that's interesting. Well, those people in London, they must know what they're doing, and that's why they're jettisoning their gold and the inventory is down. But the other way of looking at the story is that there is a segment of the audience that pays attention to the Bloombergs and CNBCs of the world that actually does know the dirt. I mean, somebody who has an enormous amount of experience in, general commodities trading per se, but not necessarily a huge amount of experience in gold or in silver, will still recognize that there's something strange going on when you have the inventories being reported as being falling as fast as they've had over the last year. So that story miraculously is able to both speak to the masses and placate them, giving the negative message about gold. But from the flip side, it also acknowledges that the reporter and the network is recognizing that there is something significant about the inventories being depleted, and that they're reporting that so that they can maintain credibility with the people who know the darker side of the same story. It's rather ironic. It's a twofer for Bloomberg.
Yeah, it just amazes me, though, that you can keep a straight face on when you're reporting that all the physical inventory is being drained out of the vault, and there's nothing to be found, but yet you're at the same time predicting gold's going to go down by 40 or 50% in the next year or two.
Right. But with some of these reporters, too, you have to question how much they really even understand what they're reading. Maybe you might have an investigative report done by somebody who's got some background in finance, but quite often you'll just get somebody who's reading a script, and they'll say some wild and crazy things. I remember, I think it was must have been May, not long after the drive-by shooting of April 12 through 15, when gold was initially attacked massively by the cartel. There was a reporter who was talking about how, gold just is not seen as money anymore. It's strictly a commodity, and nobody wants it. And there was a video that went out and then became a viral sensation. It was a laughing stock for the reporter. And these kind of things happen. A lot of the people that report on finance, or for that matter anything in news, just don't know a dang thing about what they're reporting on.
Yeah, that was a pretty humorous video, I think, a year or two. I feel like it was a San Diego reporter, and trying to
Some
remember
niche market. I don't remember what it was.
I'm
but
trying to remember her exact quote. She was saying that nobody was interested in gold anymore because it wasn't backed by anything like the dollar was.
Yeah, exactly.
I think that's what the quote
was. That was the key phrase. Gold is not backed by anything, but the dollar is. She said confidence, something to the effect of confidence in the dollar remains because it's backed by the United States government.
And gold is backed by nothing.
We should see if we can find that video and stick it up in the write-up today.
I want to say it's on one of the favorites of Silver Doctors here. So we'll take a look at that, and we'll include the link for that. That was a classic. I think it made the Docs Hall of Fame for a while. So
yeah.
I want to give the listeners a quick update here in the physical market in the U.S. and the wholesale level. Really haven't seen too many changes this week, both on a supply or premium price level, either in silver or gold. Saw big demand second half of the week, second half of Wednesday, Thursday, and Friday, with prices down, really with gold heading towards 1,200 and breaking down below 1,200. We at SDBullion saw pretty substantial and significant demand for gold, as well as in general gold and silver. A lot of big buyers stepping out that have been patient and waiting for 1,200 gold and sub $20 silver. So numerous big buyers, just anecdotally, we're seeing at SDBullion, and on a wholesale level, premiums really haven't changed too much throughout the week. Early in the week, demand was down a little bit, I think as to be expected, as kind of everyone was waiting to see what the Fed would do on Wednesday. Eagle prices, premiums on the Eagles really haven't changed hardly at all at any of the wholesalers throughout the week. It's the first time in a few weeks that they haven't risen, so we'll see how that plays out over the next few weeks, as the wholesalers were receiving this week their last allocation from the U.S. Mint, so they're not going to be getting any more till the end of January. So we'll see how that plays out. And then the other interesting thing that we've been seeing, at least at SDBullion, is typically throughout the last couple of years, we probably sell about anywhere from 3 to 4 times the volume of Silver Eagles as to Silver Maples. And, well, we're just one dealer, and obviously the U.S. is a larger market than the Canadian market, and in the U.S., you would expect to sell more of Silver Eagles than Maples. It's really been fascinating since the Royal Canadian Mint came out with their 2014 Maple with the new advanced security features. We've seen a pretty substantial flip-flop to almost maybe 4 to 5 times the volume of Silver Maple sales as the Silver Eagles, as everybody we talk to wants that coin with the new security feature. So it's kind of...
Why don't you describe those features to folks? I think they'd find it interesting.
There's micro-engraving. They actually have a little mint mark on the privy on the front of the coin that's micro-engraved and actually has the year 14 in it that you can barely make out with the naked eye. It's visible under magnification. And on the back of the coin, really the front and the back, micro-engravings, fine lines. You can feel it with your finger or with a gloved hand. And almost like rays of the sun, but very fine micro-engraving with the intention of to prevent counterfeiting. And looking at the coin, there's no run-of-the-mill General Mint that's going to be able to duplicate that easily at all. So it's been pretty interesting to see the demand for that, and everybody we talk to wants that coin because of those features. They want to be assured that it's not a counterfeit coin, and even though they're buying a new Silver Eagle from the Mint, where it is the brand new feature, and it certainly is not going to hurt when you resell the coin later that anyone you're selling it to is going to know, just looking at it, that that's the real deal, if they're not very familiar with coins. So kind of a small sample size right now with the coin only being out for a couple of weeks here, but if that continues, we wouldn't be surprised to see Maple sales up 50 or 100% next year, as if the demand plays out throughout the rest of the year. It's really a beautiful coin, and everybody we talk to seems to want it. So it'll be interesting to see whether that's just everybody wanting it in the initial stages here, or whether that trend continues throughout the rest of the year, Eric.
Yeah, and the Canadian Mint has been known to put out different special commemorative privies, and then they have the animal series, and so they certainly have a lot more variety than the United States Mint. And who knows, maybe the United States Mint will do something similar to anti-counterfeit style markings and changes to its rounds. But I don't know if they'll do that in between years, so might have to wait a year for that. I did want to mention one other thing about the Federal Reserve's announcements this week. They did downplay the 6.5 unemployment number threshold as a trigger for, significant change in their policy assessment for the landscape. And simultaneous to that, they were emphasizing that the 0% rate for the Fed funds and low interest rates overall in the regime for the discount window will remain for a longer period of time than what they have been suggesting earlier. That was the sub-message of Wednesday's combined release and press conference. And that kind of speaks to what we were talking about last week, where there would be some kind of a shift in the way in which they present their policy, where it would extend the duration of their programs for a longer period of time than the general market consensus would expect. Be that, for example, say, stopping the quantitative easing program at $50 billion per month net after tapering for $35 billion off of the 85 that we've been running at all of this last year plus time. But carrying the program on longer than people expect. And in addition to that, carrying on longer than people would have previously expected, low interest rate regimes where, the interest rate be set at 0. So, that's the kind of trade-off that it looks like they're trying to put into place to, one, placate the bond market vigilantes and all the people that are saying, what are you going to do with the Fed balance sheet continuing to explode further and further? Well, they're not going to take away all of the stimulus. The bottom line is that we're going to have enough stimulus so that the bond market doesn't go up too fast. And any time the bond market yields of, the 10%, 5%, longer out in duration as well, go up too fast, it'll hurt the economy, put pressure on the real estate industry. It will gravely hurt the balance sheets of banks. The Fed doesn't want any of that. And they're trying to fumble around to find the right mix of policies and market signals with their PR/MOPE that will achieve that balance. And it seems like they're going for longer duration of their programs with slightly less aggressiveness on a month-to-month basis, and that's the bottom line. So I wanted to toss that out there because it looks like that's what they're trying to paint for the overall picture for 2014. But the bottom line is that it's still going to leave interest rates, real interest rates, what you get on a 10-year minus the impact of inflation, at a negative rate. And that's always good for gold. So maybe they can continue to manipulate paper gold long enough to negate that reality, which is what they have been doing in the last 2 years. But the flip side of that is that all of the inventories of these vaults that we keep reporting on are diminishing day by day, and that game will be very hard to maintain once vaults begin to get to the level where you have the threat of comics defaulting and same on the LBMA and not being able to deliver to Germany and China and all the other people who want physical in exchange. So 2014 is shaping up to be a pretty darn interesting year, and big changes will probably result, and gold and silver will maybe not be liberated from outright manipulation in full, but the game of keeping prices where they are now can't be maintained, in my opinion. We have to see higher prices in order for the cartel to be able to not have everything absolutely implode on them. So,
right.
Don't know exactly what the timing will be of all this stuff, of course, but higher prices at some point in 2014 have got to come. Otherwise, everything is just going to fall apart. They can't keep this game going.
As far as timing, I'm going to go out on a limb here and call a bottom within the next 10 days by the end of the year. If we haven't already bottomed Thursday at, I think it was 1188 in gold, and just was an overnight low here tonight, 1910 or 1915 in silver. If gold does test the lows, and if they do try to smash it down one more time, I'm kind of reminded of last year in that week between Christmas and New Year's. It feels like they took about $3 to $4 off of silver and 40 to 50 off of gold, and then rallied pretty strongly throughout January. So I think in the next 10 days, if it hasn't already bottomed, the worst will be behind us, and definitely setting up for a pretty positive run in 2014. So I think we'll wrap up there. So we'll keep.
And also, that X section of the change is easier to predict than when we move higher. I mean, I totally agree with you. I think that the odds of us having already bottomed are very strong, and who knows, maybe we'll get a little lower just because they'll throw a tantrum and markets will be more thinly traded and they can get away with something like that. But, when do we cross 1,400 in gold? When do we cross 25 in silver? Those questions remain to be seen. I think by March it could happen, particularly with a quick snapback of, like January 15, 2014 going onward. But it remains to be seen. That's really the big question.
And that'll also be the big numbers that they'll have to clear. Gold really needs to clear 1450 probably, and silver the 25 to 26 level before we would see a move back towards the 2011 highs.
But I think it's coming. The bottom line is that at some point in 2014, we're going to come darn close to taking out the old highs, if not passing them, because this nonsense and all the games that they've played and the outright unethical and incredibly nearsighted policy of just blasting all of our gold reserves in the West to try to buy time and kick the can down the road for 18 months is a supreme stupidity. And these jerks are going to pay for it. But, it'll take a while for that to happen.
Bottoms are always easier to see in hindsight, but I think we have a strong likelihood that we'll see a bottom in the next 10 days if we haven't already. So that's what I'm going to call for now. So maybe we'll see in the next couple of weeks. But for the Doc and Eric Dubin, thanks for tuning in once again to the SD Weekly Metals and Markets.
SDBullion.